Hey everyone, good evening. It's Monday, October 20th. Welcome back to the US Stock GPS channel. The US stock market kicked off the week with strong momentum. All major indexes closed sharply higher. Tonight, we'll break down what's driving today's rally. Apple's breakout move, key stock highlights, and gold's continued surge. Apple's strong iPhone 17 sales. Over the weekend, research firm Counterpoint Research released early iPhone 17 sales data showing strong demand in both the US and China, up roughly 14% compared to the previous generation. That report was seen as a very positive signal and pushed Apple's stock higher. Apple shares jumped 3.94% to a record close of $262.24 after hitting an all-time intraday high earlier in the day. A small, gradual entry position still makes sense here for long-term investors. Apple's rally sparked broader strength across the market, leading the Nasdaq up 1.5% and helping the S&P 500 extend gains for a second straight day. It was a perfect mix: easing US-China trade tensions, strong bank earnings, and Apple's record-breaking performance. Easing US-China trade tensions. Market optimism also grew on signs of improved US-China relations. Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng are expected to meet in Malaysia this week, seen as a prelude to a potential leaders' summit in South Korea within the next 2 weeks. This diplomatic progress helped lift futures before the opening bell, with the S&P 500, Dow Jones, and Nasdaq all pointing to a strong open. Bank stocks rebound. After Thursday's sharp sell-off in regional banks due to rising credit risk and bad loan fears, major banks like Bank of America and Morgan Stanley beat expectations on Friday. That recovery carried into Monday, fueling a rebound in financials and restoring investor confidence in the sector. Semiconductors on fire. Apple's strong iPhone 17 sales also boosted confidence across the semiconductor supply chain, signaling steady orders in coming quarters. AMD plus 3.21%. Micron plus 2.17%. Intel plus 2.95%. KLA Corp plus 4.18%. The iPhone strength clearly spilled over to chip makers and component suppliers. Oracle plunges again. While tech stocks soared, AI software heavyweight Oracle tumbled for a second day, down 4.85% after Friday's 6.93% drop. The sell-off was driven by disappointing long-term guidance and investor concern about its heavy dependence on a single customer, reportedly OpenAI. At its Analyst Day, Oracle raised near-term revenue targets, but projected only 16% growth for fiscal 2026, far below expectations for an AI-driven acceleration. Despite a massive $500 a billion RPO backlog, including $60 billion in AI contracts with 30%, 40% margins, worries about data center deployment delays triggered profit-taking that continued into Monday. With shares now trading below the 50-day MA, short-term momentum has weakened. Trimming exposure here looks reasonable. Volatility and small cap strength. The VIX Volatility Index fell sharply to 18.4, down from the high alert zone above 20 seen last week. That drop shows investors are less eager to hedge against market risk, a sign of easing fear. Small caps also led the rally, jumping 1.95%. This indicates credit risk concerns are easing, and funds are rotating out of defensive assets into high-growth, high-beta plays. Because small caps are more sensitive to economic cycles and rate cut expectations, their strength signals renewed confidence in U.S. growth. Gold keeps rising. Gold prices extended their record-breaking run today. The continued rise suggests that, despite some positive trade headlines, investors are still focused on hedging against monetary easing and geopolitical risk. It's another reminder that capital is still seeking safety, even as equities rally. Earnings week ahead. This is one of the most important weeks of earnings season, with several market-moving companies set to report. Netflix and Tesla will headline tech results, shaping not only the Nasdaq, but also the broader S&P 500. On the Dow side, Coca-Cola, General Motors, and Procter & Gamble will offer key clues on consumer demand, industrial activity, and global supply chains. Investors are hoping for strong results to offset macro uncertainty and to confirm that corporate profit momentum remains intact. Looking ahead. Beyond earnings, attention will shift to upcoming inflation data later this week, a key input for the Fed's next rate decision. While sentiment remains upbeat, risks still linger. A potential U.S. government shutdown, sticky inflation, and ongoing geopolitical tensions. Closing. That's it for today's recap. If you found this video helpful, don't forget to subscribe, like, and share. It really helps the channel grow. Thanks for watching, and I'll see you next time.